Hi, everybody, and welcome to Chapter 1 of Operations Management, Operations Productivity PowerPoint. We're going to just review this PowerPoint with you to just give you some high-level view of some of the content and material. We do encourage you, of course, to sign into the Pearson website through the Canvas links that are provided, and be sure that you read the chapters in detail and the e-text, because those are going to be very important to give you a really detailed understanding as to all the material within the chapters, and also give you that much more preparation when you're preparing for quizzes and exams. All right, so let's begin and take a look at this. Now, this PowerPoint give you a quick overview of some of the topics within operation management and supply chain, and also use a couple of examples, real-life examples, referring to the Hard Rock Cafe. There's also a video portion of that within the Pearson website, along with some examples set by Starbucks and Taco Bell. Okay, as I mentioned, we're going to take a look at a quick profile of the Hard Rock Cafe. Also, what is operations management, and as that applies to products, goods, and services, and why study operations management. Okay, so the learning objectives after Chapter 1 is you should be able to define what operations management is, explain the distinctions, like what's the difference between goods and services. Some companies are just, manufacture and sell goods, others just services, and there's a lot of companies that provide both. Okay, and also be able to explain the difference between production and productivity. Okay. Compute a single factor productivity. There's some slides on here on how to show you how to calculate that. Also compute a multi-factor productivity and identify the critical variables in enhancing productivity. Okay, so a quick couple of points on the Hard Rock Cafe. This opened back in 1971. Now it's got 129 restaurants in 40 different countries. Many of you have probably been in one. So they give the whole idea behind this is they wanted to give an experience as well as a meal. They've got over 3,500 custom meals per day just in Orlando. So we want to take a look at things as how does an item get on the menu? How does that decision come about? And what's the role of the operations manager? Okay. So what is operations manager? Well, production is the creation of goods and services, and the OM, as we refer to it, or operations management, is a set of activities that create the value in the forms of goods and services. So essentially just transforming inputs into outputs. Okay, some of the essential functions within an organization is marketing, of course, which generates demand, sales, prices, forecasts. 2 is productions and operations, which creates the product. And accounting and finance, which tracks how the organization is doing, all the inflows and outflows of the money and the funds within the organization, who owes a company money, and who does a company owe money to, is all tracked through there. Also missing from that list is human resources, another important function within any organization. So just a quick couple of looks at organizational flow charts, how they're put together. So here, this one we take a look at a commercial bank. So we've got operations, finance, and marketing, and these are some of the functions or processes that exist within these various departments. So we've got operations inside a commercial bank, teller scheduling, check clearing, collection, transaction processing, all that sort of stuff. The finance area within the bank looks after investments, security, real estate, and of course all the auditing functions. And marketing looks at loans, how to generate loans, both personal, commercial, mortgages. Okay. If we take a look at an airline's organizational chart, again, we take a look at those 3 headings being operations, finance, and marketing. We've got, for operations, ground support equipment and maintenance, of course, on all the planes and the runways. Facility management, catering, all of that stuff falls into the operations areas of responsibility. Accounting and finance, again, payables, who does the company owe money to? Receivables, who owes the company money? A general ledger, just basically tracking all the transactions going on within the organization. And marketing, traffic administration, reservation scheduling, tariffs and pricing, sales, advertising. Also, marketing has to decide on the price of tickets Ideally they want to have as many seats filled as absolutely possible. So it's their job to try and determine what that number or that cost of that ticket is to the consumer. Now, in the manufacturing industries, again, taking a look at the three departments within the company: operations, finance, and accounting. So operations is going to look at the facilities. If you're starting up a new company, we have to first decide on the location. Where are we going to put this? How big do we need it? How is our workflow going to? What's our workflow going to look like? Production and inventory control, quality assurance and control, supply chain management. All the manufacturing and the design and the process analysis is all done by operations. Finance, accounting, again, disbursements and credits, fund management, tracking all the transactions through the organization, and marketing, again, involved in sales and promotion, advertising, and market research. Okay, so why study operations management? Well, it's one of the three major functions, as we just looked at, within an organization. And we want and need to know how goods and services are produced, and we want to understand what operations managers do, because operations management is such a costly part of an organization. It can be a very huge component of that. And we're going to take a look at some details. The interesting thing, from a cost control perspective in operations management, there's so much external factors that you're unable to control. But operations management, there's a lot of things with the direct materials and the labor and your processes that you're actually able to improve efficiencies on and actually improve your bottom line costs as well and profitability, as we'll see as we move through this example. Okay, so this is just making reference to what I was just speaking to here. This is a really great example of the type of impact that good operations management can have on the profitability of an organization. So I'd like you to take a really close look at this, just so you can sort of see how what kind of impact operations can have. So we've got some examples here where the company is trying to increase their contribution or their overall profitability. So I've got this example gives three choices. One, through the marketing option, we can increase the sales revenue by 50%. From the finance accounting option, we can reduce finance costs by 50%. I guess if you can negotiate interest rates on loans. And operations management, which reduces production costs by 20%. So we're going to just take a quick look at this, just so you can sort of see the type of impact that operations management can have on an organization. Okay, so currently we've got $100,000 in sales. Cost of goods is $80,000. You can, if you're not familiar, cost of goods essentially is your direct materials and your direct labor costs. Those items are actually controlled or managed by operations and supply chain. And so our gross margin here is $20,000. And for this example, they've got finance costs of $6,000, and their taxes are based at 25%. So the contribution currently for this company is $10,500. So if they increase their revenue by 50%, you can see here that cost of goods went up because you're going to have to spend money to make money. So that we increased the cost from 80 to 120,000, but we increased our sales by 50,000. So our gross margin went up by $10,000 here. Okay, and then all these items remain the same, and our total contribution or net profit went up by about $7,500. Now, if we reduced our finance costs by 50%, so here where we're currently having finance costs of $6,000, now we're down to $3,000. Everything else remains the same, and you can see here, we've just got a little over $2,000 increase in our total profitability. Now, the last example is something from operations management where they reduced production costs by just 20%. So now, instead of having $80,000 in cost of goods sold, they've brought that down to $64,000. So as a result, they got $36,000 in gross margin. All these other items remain the same. And let's take a look right down here. This contribution or their profit here is now $22,500. So we've gone from where we currently are at $10,500 all the way up to $22,500. Everything else remained the same. Nothing else changed. Our finance costs and everything remained the same. and we had a significant increase in our profitability. Okay, so some of the things that operation managers do, of course, planning, organizing, staffing, leading, controlling, those are just some of the headings of the many things that they do. Now here is 10 critical decisions. So you can take a look at this. I won't read these off, but these are very key items: design of goods and services, managing quality, and so on. And on the right-hand side here, this is where when you're looking for information on these things, or we will be covering these throughout the course. This is sort of a guide as to the chapters that this information can be found in. Okay, critical decisions. Okay, some examples of what those are, designs and goods and services. What should we offer, and how should we design these products and services, and how do we define quality, and who's responsible for that? So that's a very key point, especially if your quality happens to be one of your competitive advantages, right? How are you going to define that? Some other critical decisions: process and capacity design. What processes, what capacity will these products require, right? How many people are we going to need to produce this project? What type of equipment are we going to need? What type of technology and training is going to be required? Location strategies, I mentioned a little bit earlier. Where should we put the facility, geographically? A lot of that can depend on the entire structure of the organization. For example, if you're going to set up a facility where you're going to be sort of the hub or central distribution center, you may want an area that's close by traffic or rail lines, or however it is that you're going to be moving your products from. A lot of things have to be considered. The layout strategy, really important. So once you've decided on the location and the size of your facility, how should we arrange this? How large must the facility be to meet our plans? And human resources and job design, how do we provide a reasonable work environment for people? And how much can we expect our employees to produce? That's a real critical one there, because you want to make sure that you're not fatiguing anyone, and you also want to make sure that you're not pushing people to the point where not only does morale suffer a little bit, but also the quality of the products could also be jeopardized as well. So that's very important consideration. Also, supply chain management. Should we make or buy this component? That takes a lot of, we're going to be looking at that throughout this course, in terms of lots of things to consider there. Not only just the cost, but the speed at which you get the raw materials, or if you buy the component, and how well, not only the speed that you can get it, but also the quality of the product. If you can make the product less expensive, faster, and ensure the quality of it, that might be something that you may want to consider doing. And who should our suppliers, who should be our suppliers, and how can we integrate them into our system? And we look at that through just-in-time and material requirements planning. How much inventory of each item should we have, and when do we reorder? Inventory, very important decision to make, because it's very costly. You don't want to be holding on to too much inventory or raw materials. On the other hand, you don't want to run low or run out of materials or raw goods. That's going to delay your production either. Quite a balancing act there. Intermediate and short-term scheduling. Are we better off keeping people on the payroll during slowdowns, or do we lay them off? Which jobs do we perform next? In terms of maintenance, how do we build reliability into our processes? How can we, in terms of setting up checkpoints, or how can we determine and control our maintenance and our quality of what we're producing? And who's going to be responsible for that? Some of the jobs inside of operations management, there's so many: technology, space utilization, strategic issues, response time, quality, cost reduction, inventory reduction. So certifications, obviously, that are available: the Association for Operations Management, and Excellence Canada, and Standard Councils of Canada is some examples. Okay. Disciplines. Okay, some new challenges in operations management. Okay, so we went from local or national focus to global focus, and we can see that wherever we look now. Batch shipments to just-in-time, low bid purchasing, supply chain partnering, lengthy product development. now we're moving to rapid product development and alliances, and from standard products to mass customization. And job specialization to empower employees and teams. Characteristics of goods. Okay, so pretty straightforward. A good is just a tangible product. It's the cup that you hold your favorite beverage in, to the chair you're sitting on, your furniture, the car that you're driving, the television that you're watching, the computer that you're using. It's consistent with product definition. Production usually separate from consumption. It can be inventory. You can stock it up. And there's, for the most part, generally low customer interaction. For example, you would go online, for example, to Amazon, you would buy something and get delivered. There's really zero or very low interaction between you and the actual organization. Okay, characteristics of a service. Okay, so it's an intangible product. So service, again, that could be a doctor, a lawyer, it could be a personal care worker, a dentist, all those types of things. Now, some companies actually combine a bit of both products and services. So it's produced and consumed at the same time. Quite often it's unique. And there's generally, as I mentioned, high customer interaction. There's a lot of face-to-face within the service organization, and it's often knowledge-based. Okay. This is kind of interesting because I've seen things change over the years so much, and this is just a quick snapshot back in 2017 of just sort of a comparison between countries, between services and percentage of gross domestic product. So anything here in this sort of this pinkish color is services, and the green is manufacturing, and you can see pretty much across the boards, services has exceeded manufacturing by quite a bit. 25, 30 years ago, it was quite the opposite in a lot of ways. So it's quite an interesting change. Okay, so next page. Just some examples here of organizations in each and sector. Service-producing sectors such as healthcare, 6 kids, hospitals, it consists of 12% of the jobs. The Bay, for example, 15% of all the jobs. Transportation and warehouse, such as WestJet and Maritime Ontario Freight Lines, is 5%. Finance and insurance, Royal Bank and Manulife, for example, 6% of all the jobs. And you can have a look through there. Okay, some changing challenges. Okay, so the traditional approach, and again, there's more detail provided on this through the e-text, so I encourage you to really be sure to read through that. For example, ethics and regulations not at the forefront. Okay, there was a change clearly for that, and the reason for the change: public concern over pollution, corruption, child labor, and the current challenge is high ethical and social responsibility, increased legal and professional standards, and of course sustainability and going green. Also very big changes going on there as well. Okay, some new trends in operations management, ethics, global focus, real huge one. Again, I just mentioned environmentally sensitive production, mass customization, empowering employees, huge, and training that all goes along with that. Okay, and just in time for performance. Okay, so productivity challenge. Okay, so here, productivity is the ratio of outputs in goods and services divided by the inputs and resources such as labor and capital. Okay, important note here, I'm glad they put this here. Okay, so for example, the objective is to improve productivity. However, production is a measure of output only, and it's not a measure of efficiency. So it's very important to keep that in mind. Okay. Okay. Okay, so again, this is just sort of a quick graph. We talk about operations management. The core objective is converting inputs into outputs. Okay, we're going to make a little reference here, as I mentioned earlier, to Starbucks. So this is quite interesting. So there's a team of 10 analysts continually look for ways to save time and some improvements. So they made a few changes. So they stopped requiring signatures on credit card purchases under $25. And they found that saved on average about 8 seconds per transaction. They changed the size of the ice scoop, saved 14 seconds per drink, and then new espresso machines that they purchased and installed saved 12 seconds per shot. Now, taking a look at that doesn't seem like that big of a deal. We're talking about seconds, but you roll that out over how many locations they have across the globe, and it is a substantial savings, as you'll see. Okay. Okay, so operations had made improvements that helped Starbucks increase yearly revenue per outlet, okay, by $200,000 to $940,000 in 6 years. And productivity had improved by 27%, or about 4.5% a year. Fantastic results there. Now, productivity is calculated as units produced divided by inputs used. Okay, so it's a measure of process improvement, represents output relative to input, and only through productivity increases can our standard of living improve. Okay. Productivity calculations for labor productivity. Okay, so that's going to be units produced over labor hours used. So for example, we produced 1,000 units and we used 250 hours of labor. So our units per labor hour is 4. Okay. Now, multi-factor productivity, okay, a little bit different here. We've got output divided by the total of labor, material, excuse me, energy, capital, and miscellaneous, okay? Also known as a total factor productivity. Okay, some measurement problems here. Quality may change while the quantity of inputs and outputs remain constant, and external elements may cause an increase or decrease in productivity. Okay, some productivity variables, okay? Labor contributes about 10% of the annual increase, capital contributes about 38%, and management contributes about 52% of the annual increase. Okay. Service productivity. Now, service productivity is labor intensive. As I mentioned a little bit earlier, it has much higher customer interaction in the service field. Frequently focused on unique and individual attributes or desires, and often an intellectual task performed by professionals. So whether it's, for example, a mechanic, again, a mechanic is a good example of goods and services because they're going to sell you their time to repair your car, but also you're going to have to buy parts as well, whether it's brakes or spark plugs or anything else that you may need. And oftentimes with service productivity, it's difficult to make it, to mechanize and automate that because it's done on such a personal level. Okay. Now here's an example of productivity at Taco Bell. So revise the menu. They design meals for easy preparation, which will cut down on time, of course, and save costs. Shifted some preparations to suppliers. So earlier we talked a little bit about, do we make it or do we buy it? So they made some decisions here to actually buy some things. An efficient layout and automation to some of the things that they were doing, and training and employee empowerment, absolutely critical. And new water and energy saving grills. Okay, so they did that. So what was the result of those initiatives in operations management? Well, preparation time was cut to 8 seconds. Management span of control increased from 5 restaurants to 30. Think about that for a moment. That's huge. In-store labor cut by 15 hours per day, and store handles twice the volume with half the labor. That's pretty remarkable. Okay. Additionally, it conserved over 1 billion liters of water and 200 million kilowatts of electricity each year, saving $17 million a year. Well done. Some ethics and social responsibility. Challenges facing operations manager. Well, developing and producing safe and quality products. Maintaining a clean environment. Providing a safe workplace. Absolutely critical. And honoring stakeholder commitments. Okay, and then there's just a summary of some of the things that were covered in that chapter. So I hope you found this helpful as an introduction, just an introduction to chapter 1. Again, please be sure that you go into the link into my labs and you go into the e-text and carefully read through and look at all the examples and everything that's available, the information that's available on chapter 1. And I hope you enjoyed that. I hope you found it helpful. And we will see you in the next one. Take care.